Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Folks, if you don't think I'm going to be paying attention to that move again this year, you're wrong. I am. And, the neat thing about seasonalities is people tend to forget. I mean, most people forget what their brothers and sisters' birth dates are. How do they remember when a seasonal move happens in a particular instrument or security? And I think that's why it's important to pay attention to seasonalities and say, okay, I'm going to put that one on my radar screen, and I'll be watching that. And that's why I think it was neat. We can come back. I'm sure the ISE may or may not invite me back, but if they do,
you're always invited back, John.
Where we are with this particular setup, folks.
Hey, John, lots of people are asking how they can get the seasonality charts. Do you sell them? How can people access that kind of information?
Yeah, I have it. I teach how to derive through our advanced traders course, actually. And, it's very important to look at seasonality, cycles, and the advanced traders course can be found on my website. Another way of looking at seasonalities is through a book I co-authored with, and some of you may be familiar with the Stock Traders Almanac. Well, we wrote a book called the Commodity Traders Almanac, which actually includes and lists the ISE currency products. By the way, Steve, you'll be happy to know in the 2010 issue, it's not out yet. It should be available sometime in late October, and that lists all the commodities and as not just commodities, but also currencies with the euro, the four top. We include the euro, the yen, the pound, and I believe the Aussie, the Canadian dollar as well. And we list the different products that correspond with those moves. So the Commodity Traders Almanac, I co-authored that with Jeff Hirsch, and some of you may be familiar with his father, Yale. Yale started the Stock Traders Almanac some 43 years ago. I think this year, or 2010, will be the 44th issue. So that's how you can find out more information. Go visit my website, nationalfutures.com, under About Us, Books, and Educational Material, and you can find out and see what fits your needs and budget. Okay?
Hey, John, how about Stephen has a question, and he says, without giving away your proprietary information, how are your pivots different than normal pivots that you get on any software package?
Well, first off, the pivots that I have are filtered by a moving average value, number one. Number two, there are several multi-different formulas out there. And I gave this standard traditional formula using the high-low close. Some people like to use the high-low close, then wait, look for the next session's open, and add that up, divide by 4. That's older than, there was a company called Optimus Research back in the early 80s that was teaching that. And I mean, when I say early 80s, I think it was around 82. And it was to help to account for gap openings. Then, as I described today, there are people that had derived R3, a second and third resistance, and a third support, and then some people came out because of increased volatility and calculated R4. So they had 4 levels of resistance and 4 levels of support. And folks, what makes mine different is that I teach using pivots in the traditional sense, in using them as a guide, not the holy grail, to define what condition is. And also I utilize them in multiple time frames. And I was one of the first in really the world to start teaching that, and I think through the expos and webinars that I had done with the various exchanges, a lot of people have picked up on it, and therefore now other people are using and teaching it as well. So mine are, in essence, I am not ashamed to share what the formula is. I did today openly. But I do have a moving average component that filters out, that helps me derive what the market condition is, and that's where I differ from everyone else.
Thanks, John. Here's another one, and Rick says in the Commodity Traders Almanac, the yen seasonality cycle, 7 and 21-year pattern, looks different than what happened last year. Could you explain? What about different, if you look at many, many years, I think that's what Rick's trying to say, or obviously there are times where the seasonality might not work?
Well, actually, if you look at the Japanese yen in the 7 and 25 year, we this year in the 2010 combined that where we looked at the 25, and if you look there, who asked that question?
Rick.
Rick, if you look in your almanac book, if you show right around the 1st of August, doesn't it show, or excuse me, about the 8th of August, it shows that dip from a seasonal standpoint to look to be the market bottoms, just like my chart did? And the answer should be yes. And keep in mind...
Yes. He said yes.
Okay, so I answered your question. Now, here, let me go back further. It was Rick that asked that, is that correct?
Yes.
Okay, Rick, hang on there, my man. Let me show you something that makes it look a little bit different, too. Notice that this chart starts in April, ends in April, all right? And in the Commodity Trader's Almanac, we started it in June and ended in December, all right? So it just shifts over, but the pattern should look very similar to this, okay? In essence, in February, it marks another low, and in the Almanac book, it does show that as well, and then starts that. So that's the flow that you should see every year. Now, do you see that?
I think the answer is yes. So, John...
Well, you know what, and I'm glad you asked that question because it's good to clear things up because, you know, there's little nuances, and that's what's really important about getting proper education. Someone could look, just like he did, look at a seasonality chart and not understand what you're really looking at. It's kind of like playing with a firework, never having any experience or anyone teaching you what a Roman candle is, just saying, here, light it. If you're looking at it or you're holding it the wrong way, you're going to get burned.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.